Hey guys, welcome back. This is Neo with Start Invest. This is 2026 stocks to buy list. Stocks that I really love. They are all profitable already. They have great growth ahead of this at this wonderful time for their specific market segments. And also, what I love is that they are mostly platform software AI related. Okay, the three main themes. These themes see a lot of tailwinds of the macroeconomic, and in these backdrops, they should prosper with high likelihood. Okay, so we are talking about events in the future, so nothing is certain. So do not just take my words for it, and nothing is financial advice as usual. And please do your own diligence, and if you have better knowledge, please also share in the comment, and please give me a like and subscribe. Thank you. Let's go ahead with our first company, AMD. AMD. And that company is amazing. AMD growth since 2022 has been strong, with a significant jump in revenue in 2022, which was 43% plus, and then a slight dip in 2023, and then pick up again with great momentum in 2024 when their new chips came out. And then they're gonna have the MI350. Actually, it's already on the market and a lot of people are already using it. And then they will have MI400 and MI450, which should enable them to go head to head with NVIDIA AI data segment with more full stack end-to-end operation capabilities. So in terms of revenue growth, 2025, although their final result has not been out yet, but I expect to be at least 25% for 2025, and then at least 35% year-over-year growth for 2026. So, and it all depends on if the continued momentum will still be going very strong for AI segment, especially data centers, which I expect to be the case. So AMD is great, and they are already highly profitable. Their CAGR, combined annual growth rate, is pretty amazing if we do not look at the 2023 dip, which is only 3.9%. But going forward, we are more concerned about going forward because they will have their new chip, like I said, MI350, MI400, MI450 coming out, and maybe even MI500 soon in 2027. So they should increase their market share in the AI chip industry, okay? And they are going, their backdrop, their tailwind is the wave of data center that is opening up everywhere. And then since 2022, advanced micro devices has experienced a volatile, high potential revenue growth, characterized by a significant 43% increase in 2022, and then followed by a decline in 2023, and then now it's picking up again. Okay, so key drivers, see the data center segment. Okay, and then the next company that we are talking about is SETA. SETA is CETA Global. If anybody remember that I love AppLovin, the AI enabled ad platform for advertisement, especially for gaming, AppLovin. Look at their growth. In 2023, it was only $12.59. And at the end of last year, it was 700 plus, 722 to be exact. And now it's profit taking and going down to 562. So from just $10 in 2023 to 723, that is 72x, right? 72x. Make no mistakes, 72x. So you want to buy a company before everybody realizes its potential. and it's actually real growth ahead of it itself, right? So see, after IPO, it went to up to $99 per share, almost 100, and crashed down to under 10. See, $9.84, right? And then at the end of last year, 2025, 721. So now, when we look at SETA Global has similar characteristics. Let's talk about the chart since we are talking about the chart first. So we are not gonna buy at the bottom, which is fine. We're gonna buy at the bottom. We're not gonna sell at the top. But what we need to do is making sure it is on the right trend, right? Does the trend tell you it's going up? Yes, it's accumulating, and to the right is going up higher, right? So the not just the small fishes like you and me are accumulating, but also the institutional investors, which have big pockets from their clients, money, and they are also buying left and right of the shares of this company. So that's why it's also trending up already for the last, I would say, 10 months, yeah, or 9 months. And the trend is pretty straightforward. So if we see 1 year, the trend is actually straight up. These are just noise, up and down. But then if you make a FH line across them, it's a straight line up, right, to the right. So they are on the right momentum going up. And what happened was, at first they saw a very fast revenue growth, and then it slowed down as the company progressed. Sometimes they do slow down after they incorporate new technologies, or they have just purchased or acquired another company, and then they need to make sure that the different infrastructure and the different technology work with each other. And those time would be normally seeing the decelerations of their growth in revenue. And then that's what happened here. And then now it's picking up again, which is the great time to buy, because you have this about 1 year time to gauge the company's trend, right? And the trend is telling you it's going up. So right now is actually the best time to buy, especially after the recent dip from around 24 or 25 to now just $20 per share, which is great, which is wonderful. Can you imagine people who bought here with those excitement, right? Because it just went from what, $16 to 24, 25. So can you imagine those people with excitement, high excitement, and then they bought above $24, and now it is only 20. Of course, if it is long-term wise, you think the company is doing well. If you love the company so much as $24 per share, now you love it even more at $20 per share. So I did not buy at 24. I have been trying to gauge the company, and I think right now is pretty much a nice time to buy. And you are not buying it at a high valuation. Market cap is 5 billion, and it is not making a dime in profit yet, but it is about to start making profits towards the end of this year, according to the CEO. And let's see, annual increases of revenue is roughly 23% in 2023, from 591 million to 729 million, and around 38%, which is accelerating, right? From 23% year over year ago in 2023 to 2024, 38%, which is great. It's about the same revenue growth year over year for SoFi as well, right? 38%. From 729 million to 1 billion annualized. 1 billion. So it is a great position now to buy this company. For us, great position for us to buy the company, because it has proven that it can grow customer base, it can grow revenue at a healthy clip. It can also convince more institutional buyers to invest in the company for the long term. So, which is a great fundamental for us to start buying shares for this company, reflecting accelerated demands and improved the customer economics, with analysts' projections suggesting continued double-digit growth. See, if the analyst is a big boy, with a lot of money to buy their shares, are starting to buy left and right because they're also expecting double-digit growth year over year going forward. Why not now is the best time to buy, right? So all the risk in the past has been left behind. So right now is moving forward for us. So AI integration of its marketing functions. So if we love AppLovin so much, so let's go back to AppLovin. Right now we are buying this company at what? $20? Okay, $20. Now, if I give you a chance to go back in 2.5 years to 2023 and purchase AppLovin at 21 or $20 per share at this point, right? 17, 20. Ooh, can I get 20, please? Okay, this is as close as I can get. 21.51. If I let you purchase, if I let you go back 2.5 years back in time, and purchase AppLovin at $21 per share, would you want to buy it? Of course you would, because right now it's what, 563, and then just 1 month ago it was $721 per share, right? Per share, I mean. Okay, so now I'm not saying SETA will be going up as crazy as AppLovin has. AppLovin has seen annualized growth of revenue over 70%. So that's why it is so phenomenal. The same thing can be said for Shopify. Shopify, after its IPO at $20 per share, it went from $20 per share to all the way to $1,600 per share in just 6.5 years for Shopify, because both Shopify and AppLovin saw revenue growth of over 70% year over year. Is crazy. These companies are crazy. If we can find another one, right? I'm not saying SETA Global will be, seeing the strong revenue growth as AppLovin, but what if it's just cut in half, 35%, which is achievable since, last year was already, in 2024, it's already saw 38% year over year growth, and same thing as SoFi, 37 to 38% year over year growth. So these are great growth companies. At over 30% annual growth rate year over year for revenue, you're looking at a very, very healthy growth company already. So I have seen company at this clip, at this rate of growth, from year 1 to year 10, the share price normally go up at least 15x, at least 15x, at least, okay? Nothing is financial advice once again, and we are only sharing our thoughts and our know-how from our experience after trading for so many years, or investing for so many years in the stocks, different stocks. Key figures: 2022 revenue, 2023 revenue, 2024 revenue. We have talked about that. Growth drivers, which is very important because this is our investment thesis. AI integration, embedding AI into marketing functions accelerates executions for clients, improving efficiency. Same thing as what AppLovin has been doing since 2 and 3 years ago. Customer economics, increased spending per scaled customers and better retention rate. Same thing as AppLovin. Strategic mix shift towards high margin direct platform revenue and enterprise solutions. Same as AppLovin, but then AppLovin does not have enterprise solution as much as SETA Global does. Summary: SETA's revenue growth has been robust, with strong year-over-year increases in 2023 and 2024, exceeding 20% annually. Any company that exceeds 20% growth annually for revenue is amazing. Even Starbucks can only grow between 2000 and 2010 only was around 19%, I remember. If I don't remember it wrong. Yeah, only around 19%. Not more than 25% for sure. Not at any point in time for Starbucks. And see, their stock growth from early 1990s to 2010, that 20 years, maybe around 18 to 22x return, but then they are slower than 20% year over year growth. So, we can only have that much time for our investment. We want to maximize our return with minimal amount of risks, right? So we are not just looking at the potential of growth, right? We also try to manage risks, right? RISKS. So if a company has very high potential, but then the risk is like 90%, you have 90% of losing all your money, then why do you want to put so much amount of your portfolio into that single stock if the risk factor is, the risk factors are so high, right? So we are talking about, in this video, we are talking about great growth company with tailwinds of the consumer cycle, economic cycle, AI cycle, digitalization cycle, right? But then we also want to minimize risks, right, for our investment. So this is what this video is about. I'm not talking about company with the highest potential. I'm talking about company with high potential, stable growth, but also minimized risks because of all the tailwinds of economic and market shift, consumer shift, and digitalization, and going forward, especially with AI, right? And modernizations of the financial and banking industry with SoFi technologies, which we will talk about later in this video. Okay, so this is Setter, and we are done with it. And I tried not to talk about my target price, but let me give you target price just for fun, just as a reference, okay? Nothing is financial advice. AMD last year, 2025, I gave it price target at 250. It did reach $256, right on. This year, $400. Next year, $550 per share. This year end is $400 per share for AMD. And for Setter, I have already calculated the growth rate and the expected first quarter of profitability. I would suggest $30 per share by year end of this year. And if the growth rate will really reaccelerate strongly, next year could see $45 to $50 per share. Now let's move on to Reddit, our third company stock. Reddit just went IPO within the last 24 months, and it has seen a very, very volatile stock. Oh, actually, I don't have the chart here. Never mind. Okay, let's talk about the great growth. The phenomenal growth of the membership. People want to have a place to interact with each other, to ask questions to real people, not just AI. They want to find input from real people, and this is the right place. The more people join this, I would say, neighborhood or information platform, if you will, from real human beings, information platform. Remember, I like platform. I like easily scalable businesses. Platform is one, software is one, AI is one. So these all fit in the same category. Because Reddit also use AI for their advertisement, just like how Meta platform is using AI for their platforms, and how Google is using AI for advertisement for their YouTube channels as well, right? So this is the same similar prospect. With significant year-over-year increases in revenue growth reaching $1.3 billion in 2024, up 61.7% from 23. What do you think about this year, 25? I would think at least 40% year-over-year growth, right? Now, with bigger user base, you should expect the year-over-year revenue growth to be kind of decelerating a little bit, which is normal because this is the law of large number. For example, if you have just one coffee shop, you are selling 500 cup of coffee per day, you can easily double that per, sale, double that to 1,000 cup per day by opening up the second location, right? Then you sell 500 cups on the first location, 500 cups on the second location, then you already double right away, right? Overnight. But because of the law of large number, if you already have 10,000 locations for your coffee shops, and you are selling, let's say, 500,000 cups per day, can you easily scale up to 1 billion cup? 1 million cup per day easily, right? Double up in one day because you already have 10,000 locations. Can you the next day open another 10,000 locations easily? No, right? It takes more time, right? Because the larger amount of customer you already have, to double that growth, it takes even longer time, right? So, but if you are a small business, just one location, you are selling 500 cups per day, you can easily scale it up, double it up to 1,000 sales per day by opening up the second location. You see what I'm saying? So with Reddit, if you have more and more membership, year-over-year growth, then this year growth will be, the revenue should be a little slower, next year will be a little slower. That's what it is happening here. That's what I'm trying to say. 2024, 61%. This year maybe 40 to 45%. Next year maybe 30 to 35%. But it's still amazing growth because why? I'm telling you why. In America, their members in America is about 50 to 55% of the total global membership. But then the people, the members in America, actually, the monetization per year is about $9 plus. So, for example, if I am a member of Reddit, I may click on the ad, I may buy something, and then Reddit will get $9 plus from me for this year. But if I am a foreigner using Reddit, the monetization per member is actually much lower for foreign members. Last month I read it was $1.7 per year USD. Okay, USD equivalent we are talking about. So you can see the huge gap, huge discrepancy in the monetization between the users in US or users in foreign countries. That discrepancy is $9 plus in US based members versus 1.7 US equivalent dollar only for foreign countries based members. So to address this issue, Reddit is using a lot of AI to especially cater to the foreign markets and submarkets and increase the monetization. And I believe the growth for this year for Reddit will be at least 40 to 50% from overseas markets. We're gonna see strong growth for Reddit. Human beings do have a tendency to want to interact with each other, with real human. And this is the platform to do that. For now, okay, I'm not talking about future. It may change. It may have, AI, you can just talk to AI. You don't even need to talk to human. But for now, for human interaction, online human interaction, this is a great place to be. And Reddit is seeing strong revenue growth, strong margin, and is expected to continue to diversify into different market segments. And it is just a matter of time. They may even try to adapt to different new market strategies, such as having their own metaverse, because you have so many humans, and we can also interact with each other and with the knowledge that we want to gain by virtual interaction, right? So we will see, but there are a lot of growth opportunities ahead for Reddit, for sure. and I highly recommend it. But the stock price has run up quite a bit. When I first recommended it to my coworkers, where that was before the start of my channels, my YouTube channels, it was only $85 to $89 per share, and I bought 100 shares at $89 to $94 per share. And then I bought another 50 shares at around $140 per share, and now it's already $220 to $230 per share. I'm not saying right now it's overvalued, but if you are on the fence, just wait for the next earning report and see if the CEO and CEO and CFO of the company are also seeing strong growth for 2026 and forward, then you will be better informed at that time to whether buy or not buy the shares of Reddit, right? But for me, I highly recommend it. I see it as a strong growth for human beings, information sharing platform. So I really love it. And let's see. See, while the US still leads in total Reddit users, overseas growth is significantly faster, with international daily active users jumping 31% versus in US only 7% in late 2025 when they start doing the internal examinations of trends. Yeah, I believe it will be a great growth, but nothing is financial advice. Let me remind you one more time. Next, wow, Resolve AI, RZLV. This company, I just recently added 4,000 shares and on the way to, for myself, 10,000 shares. I believe in this company. Achieved its first profitable month in December 2025. Now, CEO last year said, when asked the question, when do you expect the company to make the first profit? The management wasn't very sure at that time. At that time, per month revenue was only 17 million. January 2025, per month revenue, recurring revenue, was only 17 million USD. At the end of last year, December, was originally expected only 50 million. Then the company executive revised it in Q3 to 100 million USD. Then the news just came out earlier this month. Resolve AI actually saw 209 million USD recurring revenue. Amazing. It has been upped expectation by the management twice and still handsomely beat the highest expectation for the year. From 70 million just 12 months ago to now 209 million recurring revenue. More than 10x of growth in revenue. Monthly growth. I'm not talking about yearly. It's only monthly growth. And this year, management is expecting 500 million USD. If this trend continue, beat continue, would you just expect they will closely match 500 million recurring revenue by December of 2026? I don't think so. Maybe 700 million or even 1 billion, right? But we are not talking about, our aggressive expectation, okay? We take the management word for it, but even if we take the word of the management, 500 versus just last month 209 million is over 2.5x of revenue growth. That is 150% growth. Remember what I said with AppLovin? They were 70% year-over-year growth. And now we have 150% year-over-year growth. More than double AppLovin growth. This is a phenomenal company. What did they do? Rest of AI, when you go mobile, right, commerce, you go anywhere, you use your voice, they have agentic AI to take care of your needs. You say, oh, I want to buy something casual, shoes, kind of have the premium feel, but not too extravagant. And then it will gather all your old previous past information, how you make purchases, and then what are the trends, and then give you recommendation by category, by price categories, brand recognition, material usage, right? And what are the most trendy, or if you don't want that trendy, what are the most subtle ones? And with this deeper engagement with customers or potential customers, it actually gain more interest of the potential customers, which give rise to better sales number. It's that simple. Customer want engagement. They don't want to be not acknowledged. You walk inside a store, or no representative want to talk to me, want to say hello to me. Oh yeah, well, let's walk to the next store, right? I mean, if you go inside a store and they are warm, they welcome you. Hey, what can I help you today? Oh, you dress so nicely. I love your suit. They are selling suit, and then you start chit chat. What is the likelihood that you are more likely to buy something before you walk out of the store, right? Right. The same thing with online. I mean, if you visit Amazon and nobody interact with you, oh well, let's go away. Let's move on to the next Shopify. Let's say, right? Yeah. So okay. Anyway, I'm making up all these examples, but you guess what I mean, and signaling a major step. So revenue is different from recurring revenue. From that recurring revenue, a percentage is the real revenue for the Resolve AI. Okay, so 70 millions, and now they are already making profit, even though it's a small profit. They become profitable, and see, they are projecting 500 million ARR, annualized recurring revenue, by the end of 2026. And of these 500 millions, around maybe I would say 50 million is the actual revenue, okay? And then with economic of scales, and now with only 17 million revenue, they already make profit. And then with 50 million at the end of this year, you can tell that profitability can triple, quadruple easily, actually, with economic of scales. It's amazing company. It's a platform. Once you have a platform, it's easily get scaled up for the next customer, which is what this platform is about. Strong ARR growth. Crazy. From 209 million last month to the end of this year, for aiming at 500 million, and with past history can even surpass this easily with flying colors. So several bullish outlook, buy ratings by analysts. Strong customer adoption. Over 650 enterprise clients like Adidas and H&M, which me and my wife frequently actually shop, right? So, and other strategic partners. Yeah, we are not talking about skepticism. We know everything has risks, right? But we can also mention it though. They may raise capital, just like SoFi. Even SoFi is already profitable, but they raised capital twice in 2025. Why? They can take advantage of the market condition, lower their cost of capital. With the lowest cost of capital, increase their profitability with higher margins for the next few quarters, which in turn generate more cash in the future. and the cash can be further deployed to make more loans, increase the future profitability even more. It's a flywheel effect. So why not, right? Okay, this is our part one, and then we will talk about the next one, which is SoFi, SoFi, SoFi Technologies. Okay, in part two. Thank you. All right, guys. Next company, drum roll. SoFi Technologies. SoFi is the ticker symbol. You all know, if you have been with me for the last couple of months in my channel, you know my top holding is SoFi Technologies. It is like Amazon for commerce, digitalize everything about commerce, right? By Amazon. SoFi is trying to digitalize everything in finance, personal finance, corporate finance, and also helping other companies to build up their digitalization for their own financial institutions with their crypto platforms, with their loan platforms, with their overseas global remittance platform. So we will see. So SoFi, let's go back to their three core segments. Lending, products such as student loans, personal loans, home loans, business loans, auto loans. And then they increasingly sell loans to third parties, and third parties love it because they have very great underwriting capability with the AI enabled underwriting capabilities. So a lot of other financial institutions actually are more than willing to buy loans from SoFi, the existing loans. So they actually become a platform, loan platform too. If other companies want to leverage on SoFi's technologies to underwrite loans, they can partner with SoFi, right? Okay, financial service for consumers like you and me. We have banking service, checking, saving accounts, debit cards, credit cards, and investing, such as the crypto investing. They have robo advisor as well. They have crypto trading, they have ETFs, they have private funds, private companies such as SpaceX as well. Then they have credit cards with rewards, they have debit cards with rewards, they have insurance products for home, auto, and your renters as well. They have tools such as SoFi Relay to keep track of how we are using our cash, a cash coach, how we should put our cash in different accounts to maximize our returns and minimize risks. And then financial planning. And if you are a SoFi Plus member, you have free financial planning. It's free. So for example, if you have 2 million in your accounts and you have heirs to inherit your capital, you need to do financial planning, right? And you know financial planners charge left and right for that. And it is free if you are a SoFi Plus member. Workplace, SoFi at Work. It has recently partnered with CRM, I think. I forgot the name of the company on top of my head. But it has more than 170 million members worldwide. Imagine only 20% of that 170 millions download SoFi app and start doing banking with SoFi or using their loans. My God, you can imagine the growth of SoFi will be so phenomenal. So this SoFi at Work is employee benefits. So what are the employee benefits? For example, if you work in for your company, they probably have benefits such as your retirement benefits. So, and then if you go take a vacation, you can also download SoFi app, and it uses AI to categorize everything that you do and see your spending. And then when you do try to ask for reimbursement from your company, you can just submit the report from SoFi app. And also when you do year-end personal tax, you can use all these information from SoFi app and transfer it to your whatever software, taxation software you use, right? Such as TurboTax, right? So make it very simple. So this is financial service, the consumer side. Then they have the technology platform, the enterprise side. So Galileo, a payment platform for other companies to use the financial products of SoFi. And Technisys, a cloud-native core banking platform that could be licensed to other financial institutions if they want to use SoFi technologies via the cloud, right? And then the goal is to provide banking infrastructure to non-financial and financial companies. So not just other banks, but also other non-banks too. If, for example, if you are United Airlines, you can partner with SoFi. You can use their infrastructure via the cloud to monetize how people are claiming the rewards, right, on their travel reward programs. So this is one way. And United Airlines as an example, which is not a financial company, right? So, okay, let's move on to SoFi charts. So it was as low as $4.70 or even $4.55, I remember, in 2023. And last year, the low was around $8.50 something, I remember. But then here it doesn't show. Sorry, my nose is itchy. And then the high was 30. Excuse me, sorry, I'm so sorry. Okay, cut and then start again. Okay, so the low was around $8.55 last year, but it doesn't show here. And then the high was about $32 plus for around October time, I remember, or November, yeah. And then now it has been going sideways if you look at the last 3 to 4 months, 25, 25, 25, 25, and now trying to touch 25 again. 25, 25, 25, each it will rebound upward. But then each rebound is less energetic, you can tell. So now it's actually in a consolidated triangle. I have seen this pattern many times for growth stocks. Even Amazon has seen this type of pattern a few times. And then it is waiting for the next quarterly report and see the guidance for this year and next year and see the growth rate, the guidance for the growth rate going forward for SoFi. If it will be good again, then I expect it to trend up to the upper line one more time and then kind of go down again if towards the end of this quarter SoFi will not be invited into S&P, which is understandable. You know, some investor may kind of feel not energetic and then stop their buying. And then, but then if quarter two SoFi will be announced to join S&P 500, then you can expect the excitement and then it will continue to go up. And also with higher profitability continuing in 2026, we should, of course, see SoFi's share price to go higher. But remember, nothing is financial advice. But this is to be expected though. For Robinhood, we can see once SoFi announced they will have their crypto trading back and also let other financial institutions to use SoFi crypto trading as a platform because SoFi has a charter bank status and because Robinhood doesn't have a bank charter, they cannot do the same service for other financial institutions. So you can see the investor for Robinhood have been quietly selling Robinhood. See, since SoFi announced they have crypto trading back and for institutional clients, the share price for Robinhood have been trending downward too. If it breaks this local low, 106, which seems like today is 105 only, it could go down even more. It could, okay? So Robinhood is also good, but The only thing missing is a bank charter versus SoFi. With a bank charter, SoFi can use all what they are doing as a platform for other institutions. Do you remember what I like about all the company I mentioned here today? Platform business, easily scalable, not just for themselves, but for other clients as well, right? Then if other company want to grow their own portfolio or their own membership, they also need to rely on your capability. Then they will have to pay you royalty fee. They have to pay you every month to do what they want to achieve, right? And then AI, second one, third one is software. SoFi is also software downloadable. Versus, let's me give you an example, Costco, right? If you want to serve a new location, Costco have to talk to the city, buy or lease a new land, a big piece of land, and then spend money to build a structure there, and then hire people before they can even serve that new city, right? But for SoFi, all they need to do to service a new city is for the people who live in that city to download the app over the air, OTA. So software, AI enable you to lower your cost a lot, and then they are unlike human beings. They work 24/7, which is amazing, and they double check all the possible error. But with humans, the legacy banks such as Bank of America and Wells Fargo, they have different departments talking to different departments. You walk into a branch of Bank of America or Wells Fargo to apply for loan. They have to talk to another loan department, see if there is an available personnel to come to meet with you, set up an appointment, and then you input the information, and then they have to forward the information to the other loan department, and human typing into the system, prompt to error versus AI, everything vertically integrated for SoFi with AI. Everything is double checked real time. So it saves cost, it saves a lot of errors, possibility. So how can you be SoFi? SoFi is like Amazon in another way, which is Amazon has no brick and mortar store. So the overhead costs are very low. They just need to pay for the centralized logistics hubs, such as the big warehousing and the logistic fleets for deliveries. And then because everything is centralized, it's easy to communicate with different departments as well. So it's minimize error, minimize cost, and time to market or time for delivery is much shorter. SoFi has no brick and mortar branches. So they already don't have to pay rent. And if you have brick and mortar branches, when you're paying rent, you have thousands of those locations, right? And when you're paying rent, your branch is not open 24/7. It's only open 10 to 12 hours per day. And Saturday, Sunday is closed for a lot of major banks. Those are wastes, right? And human being can call sick. Human being can also input some data with error. Versus SoFi vertically integrated with AI, no departmental communication issue. They're vertically integrated, one data step. They know everything about their members, all what is going on in the financial world. Everything is vertically integrated, so much better. So we talk about SoFi, and they have been seeing about 34 to 37% annual year-over-year increase in revenue, which is solid growth. And since we would also love to talk about price target, which is once again for reference only, not financial advice. My low price target for SoFi, if it would not enter S&P 500 for this year, which is very low possibility, I think SoFi has very high possibility of being invited to join S&P 500. And if it is not joining S&P, let's say, but still have that 30 to 38% year-over-year growth of revenue and solid profitability, I would see SoFi at $45 per share. And if SoFi will be joining S&P 500, normally I have seen is those companies will see 30 to 100% more price movement, but I'm taking the lower end of 30 to 35%, so SoFi will be $60 per share. If it will be joining S&P in Q2 and Q3 are the most likely to happen quarters for me. Q1 may not even be happening for SoFi yet, okay? And then if SoFi, let's say another big partnership, let's say Robinhood want to join force with SoFi, or it lands on a huge partnership, let's say Amazon wants to from now on just use SoFi infrastructure for all the reward program, or major airlines, very major international company want to partner with SoFi, we have those backdrops of news. SoFi can reach $70 to $80 easily, right? Because it also tell us that we should expect even more accelerated growth for SoFi, both bottom and top lines and their memberships. So, but then I want to be on the conservative side, so I would be saying $45 to $60 per share at the end of this year. Okay, last year I did say SoFi on the bottom would be $25 per share, on the high end would be $34 per share, and SoFi last year ended up at around $30 to $31 per share, which is right in between. Wonderful. So this year I would say $45 to $60. If it's end up at 55, I was a happy camper. All right. So, and then next one, because the video is already so long, almost 1 hour. So I would just mention the honorable mention, which is SMR, is a small radioactive reactor play. Applied Digital, which is data center related. They have their specialized cooling solutions for data center. With all the data center, you have huge amount of demand for all the data processing. The computer, they are very hot. They need very efficient cooling system, which Applied Digital has. Sanghang AI. Sanghang AI is so nice. When you talk about robots and our cars as robots, right? If you talk to your car versus talking to Google Assistants or Amazon Assistants, our car is still taking the commands, not really on a conversational level as we talk with each other as humans, right? So Sanghang AI can enable that, not just for our car, not just for restaurants, but also for robots, right? So when we talk about robot sales, think about how robot can interact with us via sound, right? So Sanghang AI is one of the big likelihood to be a winner in this segment. And then Big Bear AI, with robots, right? They have a pair of eyes, right? Just like human. The eyes are video cameras, of course. But then they have to recognize your face and my face and say, hi, good morning, Mr. Seka. Hey, good morning, Mr. Kokoka, right? And then I'm making up those last names. And then yeah, so the robot walk into the office. They have to recognize, oh, this is the boss, Mr. Kokoka. Oh, this is the secretary, Miss Lee, right? Yeah, for example. So yeah, so the robots have to be able to recognize people, right? Have to be able to recognize, oh, this is an animal, it's a dog, that is a pig. And then if you have animals at home, it has to be recognized what animals they are feeding, right? If they are helping you to feed your pets, right? So Big Bear AI has their facial recognition already working for 11 major airports in the United States, the busiest airport in the United States. And it is just a matter of time when the robotics theme, momentum become big and the companies are ready to sell their robots. You don't want to buy a robot which cannot recognize you, right? If the robot cannot recognize you, the robot follow the wrong master. It's not good, right? So big bear AI, okay? And then if the robot cannot communicate with you on a conversational, natural human conversational level, it's also not good, right? So Sanghang AI is the one that I think are the most logical outcome for the robotic what do you say, winners for the robotic movement or trends. All right, and then on the consumer level, I have Celsius, I have Lululemon, I have ELF, I Live Face, and then Honest. Because this video is so long, so all these other company will be for next one. But for now, this video, my 5 biggest recommendations are AMD Advanced Micro Devices, Zeta, ZETA, Global, Reddit, and Resolve AI, REZOLVE AI, and drumroll again, SoFi Technologies. Dun, 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 dun. All right, thank you guys. Thank you so much. Thank you for watching me. I know it's a lot of talk, and hopefully we will have another wonderful year with great returns. Have a wonderful day, everybody. Love all the time and appreciate you. Please give me a like if you think I at least deserve one, and join the channel. Thank you so much. Appreciate you guys. Have a wonderful day.